Look at the money sitting in your checking account as a target for inflation. Every year, rising costs chip away at your purchasing power, turning cash into an active loss. If your money isn't growing, you are losing ground. Most people wait for a specific salary milestone or a safe moment in the market to begin investing. They treat wealth building as a luxury for their future selves, rather than a necessity for right now. Delaying your start date by even a few years carries a mathematical cost that most people never fully recover from. This chart maps a 25-year-old investing $100 monthly. At a historical 10% return, this reaches $700,000 by age 65. Starting at 35, with identical contributions and returns, yields only $250,000. The resulting $500,000 difference comes down to the math of compound interest. Time, rather than salary or stock-picking skill, did the heavy lifting for the early investor. $100 today carries more weight than $1,000 5 years from now. Capturing that value requires immediate action. To maximize these returns, you have to protect your growth from taxes. A Roth IRA allows you to invest after tax income, meaning every dollar of growth and every future withdrawal is shielded from the government. This chart shows the impact of capital gains taxes on a standard brokerage account. Over 40 years, taxes can consume hundreds of thousands of dollars of your total wealth. In a Roth IRA, you keep the entire amount. You can open this account for free through established platforms like Vanguard, Charles Schwab, or Fidelity. Spending 15 minutes to set this up ensures that decades of market growth remain in your pocket, rather than going to the IRS. Once the account is open, you need a reliable engine for growth. Warren Buffett has consistently recommended a specific strategy for the average investor to avoid the risks of picking individual stocks. You buy an S&P 500 or total U.S. market index fund. This is a single basket containing tiny pieces of the 500 largest companies in America, providing instant diversification across the entire economy. This chart compares the cost of an index fund, usually around 0.03%, to the 1% fees charged by many actively managed funds. That small percentage difference compounds into a massive drain on your total wealth over 40 years, and research shows most human managers fail to outperform the index anyway. Look for ticker symbols like VTI, SWTSX, or FSKAX, depending on your chosen platform. This strategy moves you away from predicting the success of a single company and toward betting on the sustained growth of the American economy as a whole. To power this system, automate a $100 transfer for the same day your paycheck hits. Moving the money before you have a chance to spend it ensures the investment happens every single month. Most people find this $100 by auditing their recurring bank charges. Look for unused app subscriptions and streaming services that quietly drain your balance every month. Trimming a few low-value impulse food deliveries usually covers the rest of the monthly requirement. Reclaiming these small amounts allows you to fund your future wealth without significantly altering your current quality of life. This transition turns you into an equity owner. You now hold a stake in the profits of companies like Apple and Amazon rather than just purchasing their products. This process is dollar cost averaging. When market prices drop, your automatic $100 buys more shares at a discount. In the macro view, the U.S. stock market has trended upward over every 20-year period, absorbing the impact of recessions, wars, and global crises. Consistency has historically outperformed the high-stress attempt to time the market's peaks and valleys. Take the first step today by opening a Roth IRA. The process takes 15 minutes at any major brokerage. Set up the automated monthly transfer into your index fund immediately after your account is funded. The final requirement is discipline. Leave the money alone and resist the urge to check the balance during negative news cycles. Wealth builds through the steady, automated placement of one small brick every single month. Your future self is waiting for you to start.